Hello and welcome to ThePrint. I'm Bidisha, and today we are talking about something that may sound like a US issue but actually affects the world, including India. The US Federal Reserve, the American central bank, just cut interest rates again. That sounds technical, but it changes how money flows across the world. How much it costs for countries like India to borrow, and even how strong our rupee feels. And this time, the story has an unusual twist. The Fed made this move while the US government itself is shut down. Now, the question is, what did the Fed exactly do? So let's start with the basics. The Federal Reserve, or simply the Fed, lowered its main interest rate by a small amount, which is 25 percentage points, or a quarter of a percent, bringing it down to a range between 3.75 to 4%. Now, what does that mean? When the Fed cuts rates, it becomes cheaper to borrow money. Businesses can take loans more easily, consumers can spend more, and ideally the economy gets a boost. The Fed decided to cut because the US economy is slowing down. Growth has cooled, job creation has weakened, and inflation, though down from its 2022 highs, is still not fully under control. In short, America's economy isn't collapsing, it's just losing some speed, and the Fed wants to keep it from stalling completely. But why did it happen now? Here's where it gets interesting. Normally, the Fed makes its decisions based on a lot of fresh data about jobs, about inflation, consumer spending, and business confidence. But this time, it didn't have that data. Why? Because the US government has been shut down. That means many government departments, including the Bureau of Labor Statistics and the Commerce Department, which release official data, have stopped or slowed their work. So the Fed had to make this crucial decision based mostly on August numbers, instead of a more recent information from, say, September or October. That's why analysts have been calling the Fed and saying that the Fed is flying blind. Now, first, let's go back to the basics and understand what does a government shutdown mean. Let's unpack that. A government shutdown in the US happens when Congress fails to pass a spending bill. Basically, when lawmakers cannot agree on how much money to allocate to run the government. Think of it like this. Imagine your office or school can't agree on next month's budget. Until you sort it out, salaries stop, the lights stay off, and work grinds to a halt. That's exactly what happens during a shutdown. When the US government shuts down, hundreds of thousands of federal workers are furloughed. That means they are put on temporary unpaid leave. They still have their jobs, but they can't go to work or get paid until the shutdown ends. Once Congress finally passes a funding bill, they're usually paid for the lost time, but the disruption hurts both workers and the economy. Now, this isn't the first time America has gone through this. Since 1980, it's happened more than 20 times, though most shutdowns lasted for about a few days. The longest one ever stretched 35 days from December 22, 2018 to January 25, 2019 under President Donald Trump. Why did that 2018-2019 shutdown really happen? Because President Trump wanted Congress to approve $5.7 billion to build a wall along the US-Mexico border. Democrats, who then controlled the House of Representatives, refused, saying that money could be better used elsewhere. The result? A deadlock. No deal, no budget, and a shutdown that lasted for over a month. Airports, national parks, and research labs closed. Even key economic reports were delayed. Now fast forward to 2025, and President Trump is in power again. This time, the fight isn't about a wall, but about federal spending levels and budget priorities. Republicans, who control the House of Representatives, want a large spending cut, arguing that the US national debt, now over $35 trillion, has spiraled out of control. Democrats, who control the Senate, want to maintain or even increase spending on healthcare, social programs, and green energy. Both sides refuse to compromise, so once again, no agreement means no budget, and parts of the US government has shut down, making it one of the longest shutdowns since 2019. Now the question is, how does this affect the Fed? Because of this shutdown, the Fed's usual data pipeline has gone dark. No fresh job numbers, no new inflation data. That's exactly why the Fed chair, Jerome Powell, admitted they were operating with incomplete visibility. So to prevent the economy from slowing too sharply, the Fed cut rates slightly. A safety move, not a bold one. Inside the Fed, there's even division. Governor Stephen Miran wanted a bigger half-point cut to help protect jobs. But officials like Jeffrey Schmid opposed any cut, warning that inflation could rise again. In the end, Powell went with a middle path, a small cut now and a pause in balance sheet tightening from December. Now, what does this mean for India? When US interest rates fall, it affects the entire world, including us here in India. How is that possible? Well, when returns in the US fall, global investors look for better opportunities elsewhere. That often brings more foreign investment into India, into stocks, bonds, and infrastructure projects. It can also make borrowing cheaper for Indian companies. This is why markets in India reacted positively after the Fed's announcement. Bond yields softened, and investors expect more liquidity in the coming months. And it couldn't come at a better time, honestly. Under the PM Gati Shakti, India is rolling out projects worth over 13.6 trillion rupees, linking highways, railways, and ports. The Sagarmala program is modernizing over 230 ports and coastal facilities. These initiatives aim to make India the hub of trade corridors connecting Africa and ASEAN. A cheaper global cost of capital means India can fund these long-term projects at lower interest rates. That's a big advantage. But there's a flip side. If the Fed's rate cut signals that the US economy is weakening more than expected, then global demand for Indian exports could fall. America buys about 17% of India's exports, so a slowdown there could directly affect us all. So for India, it's a mixed story. Positive, cheaper money, more investment. Risky, weaker global demand and volatility in markets. There is, however, a chance for India to lead still. India does have a window of opportunity. While the US and Europe wrestle with slowdowns, India can step up investment and deepen trade with Asia, Africa, and the Middle East. Lower US yields also make the dollar slightly less dominant, opening the door for India's push toward rupee-based trade. The Reserve Bank of India has already set up special Vostro accounts with countries like Russia, the UAE, and Sri Lanka to allow payments in rupees. It's a small but important move toward more financial independence. If India uses this moment wisely by strengthening its infrastructure, diversifying trade, and improving ease of doing business, it can emerge stronger even as advanced economies slow. The Fed's rate cut is not just a US event. It's a signal about the world's economic pulse. It shows how political paralysis, like the shutdown in Washington, can ripple across oceans. For India, it's both a warning and an opportunity. Because while the US struggles to keep its data flowing, India has a chance to keep its growth engine running. As I like to say, we can steer the ship, but we cannot control the weather. So let's make the most of the calm while it lasts, by building ports, corridors, and confidence that will keep India steady when the next storm inevitably arrives.